crude oil has reached to the $93 per barrel. This has a very significant impact for the economies like the India. India imports their 85% of the energy requirement from the Gulf region. Due to the escalation of Iran, USA and Israel war, the crude oil has been jumped significantly, especially in this 2026. अगर last 6 trading sessions में the crude oil has been up by 31%. In 2026 itself, the crude oil has been up significantly around 52.3%. This is the highest ever gain of YTD level since 1997. The crude oil, which defines the inflation's level, which defines highest interest rate for the RBI policies, and it has a significant impact for the overall Indian equities. अगर आप क्रूड ऑयल की बात माने तो क्रूड ऑयल which provides the raw material for the many companies like the paint, additives, all these companies will get impact because their margin get lowered. Let's take an example for the paint companies like the Asian Paint, the Pidilite Industries. Their margin will definitely going to hit because of this crude price increases. Because 30 to 40% of the paint and the derivative companies, the cost, the raw material cost is the crude oil, and which has a significant impact on their margins. All the oil marketing companies like the HPCL, BPCL, IOCL, they will have their negative impact because their cost is going to increases, and if they don't pass on to the consumer, they will get the margin pressures. Every increase of 0.5 liter for the crude oil, this will impact around 7 to 11% of their EBITDA margins. On the other side, oil explorations companies like the Oil India, ONGC, they will get the positive sides due to the increase of the crude oil because they are explorers of the crude oil. So their EBITDA margins is have a possibility to increase around 7 to 8% of the EBITDA margin. So on the other side, the paint and derivatives, crude derivatives companies will face the pressure. All the oil marketing companies will face the pressure. However, the explorations companies will have a positive side of the impact. As far as the Indian market is concerned, the analysts are estimating that this increase of the crude price will negatively impact on the inflation side. Because of the crude price increases, your inflations like the CPI and WPI will get increased. Every 0.5 per liter barrel increase will impact the 30 to 40 basis points of the CPI and 80 basis points of the WPI. This will in turn get impacted to your interest cost. Your interest rates is going to increase because your CPI inflation and the WPI inflation has been increased. And because the higher interest rates are increased, this will impact the profitability of the many companies, including the banking financials, FMCG, all those companies, because lower interest rates gives the higher margins, profitability, liquidity, but the higher interest rate get impacted when the profitability has been concerned. If you see, because of this crude price increases, analysts are estimating that the 15 to 20 basis points decrease of the Indian GDP. Because we are importer of 85% of the crude oil, this will impact significantly on our fiscal deficit. So every $10 per barrel increase on the crude oil, this will impact around 0.4 to 0.6% of the fiscal deficit of the GDP. So GDP is in danger when this oil prices going to increases. Recently on the Friday, Qatar Energy Minister has highlighted that if this Gulf tension is not paused or get escalated to the many other days like the months and the quarters, this will have a significant impact on the crude price, and he said that this crude prices can go to the $150 per barrel, and this is not good for anyone. आपने सुना होगा कि Strait of Hormuz, which plays an important role as far as the transport of crude oil to the global economies like the China, India, Korea and Japan. Strait of Hormuz is a small piece. It's a 13-mile piece between the Gulf of Oman, Indian Ocean and the Persian Gulf. And most of the Strait of Hormuz controlled by Iran. And if Iran decided to stop this Strait of Hormuz, and many ship companies, many oil tanker companies are not getting the insurance to travel those crude tanker oil from that place, it has a significant impact. Nobody wants to go there and take the oil and then supply to all the economies. So Strait of Hormuz situations, it is very dangerous for overall world, because 20% of the crude oil exports that happen through the through the Middle East and the Gulf countries, all the countries like the Kuwait, Qatar, UAE, Saudi Arabia, Iraq, all those countries constitute around 20% of the crude oil supply to the world economies. And if that get impacted, the crude oil possibility to increase even higher gets inflated and gets higher. So if Indian government decide to pass on this crude oil prices increase to the consumer get impacted, your inflation's levels get impacted, and that will impact to all the FMCG companies, all to the day-to-day life of the common man in India as well. So situation is quite interesting. As far as the global markets are concerned, the US market closed around 1% drop in the Dow Jones. Nasdaq was down on the Friday. All the major indices like the South Korea, which got impacted recently, around 20% drop from their highs, because South Korea imports around their 80% of the crude oil from the Middle East, and that is also getting impacted, and that is impacting to their stock market as well. So situations overall is not looking good as far as the crude oil increase is concerned. And as I said, the crude oil has a highest run since 1997, which is a 52% increase in single YTD level. So overall, the crude oil, which decides the raw material for the many chemical companies like the synthetic rubber, chemical companies, carbon block, that companies also get impacted. So in overall, the crude oil, which will impact interest rates, which will impact the economies. That's why the economies like the India, which has a significant role when there is an increase of the crude oil levels. Hope you like the videos. Follow me for more updates. Thank you.